Okay. Hello, everyone, and welcome to October 10th, 2019, the winners and losers. And TLT exits with a win of 12%. Let's go to the charts. And here they are. TLT, we set TLT yesterday. We set in the punters to come in and close here. And there was what they call the last bar low. And I got taken out here. And we got out at 501. So let's do the numbers. 4.55, that was our cost. And we got out at 5.01, 46 cents times 100, which is one contract, $46. A little disappointing, yeah, but here's the point. The TLT owed us 105. So now it's only $59 and the commissions. And now if you have not heard, a lot of brokerage houses have now dropped off the commissions, and now you only pay for the contract handling. So let's say in the contract it's supposed to be 65 cents. So we figure that we still owe $60 on TLT. $60 is a lot better than 105. That moves it to the bottom of the losers list. Also, too, am I surely disappointed? No. Look, everything goes up, everything comes down. So what will happen? We'll come back up. My entry pattern will reappear, and I'll get in. Somewhere in here, I'll get in, get back to $60 that owed to the Tigers, and then eventually retire TLT to the winner's circle. All right, that said, let's, oops, sorry about that. Here we go. Let's go on to our new leader now is IYR. Now, something else. So we got $46. The contract cost us $455 as a percentage, and we made back 10%. Oh, I thought it was 12. All right, let me do the numbers over again. You always go back and check your stuff. Work again. 500 minus 455. Divide that by the 455. Yeah, it's 10. I apologize. The information on the slide is wrong. Okay, that's what I do for rushing and getting this up to you as possible, as soon as possible. All right. So let's now focus on IYR. IYR owes us. Let's wait for it to show up. But this is getting encouraging. We have now a little point up. It's 473. We're still hovering in this the $175 to $200 range, which brings us down to about 500. 500 dealing with 500 is better than dealing with 700. I have other trades that are much larger in debt. That's what goes on. So let's get now to Edison. And Edison here owes us $442, and they're behind $100. There's a little bit of doji action. Oh, no, I forgot. Remember, we're doing a put here. We want it to go down. Yeah, it closed here and it dropped here. So Edison actually, yeah, exactly. We made a little bit of money. It's heading in the right direction. The MACD is downtrending. The stochastic is downtrending. Don't look, the ATR is only there because I need it for calculations. So we'll keep on. Our defense is still long till it gets down in here. It's got to get in between my 30-day moving average and my long distance defender. So right in this zone here, I'll move the stop on down and anticipation that this is going to be going. All right, that said, let's go over to Pepsi. Now, Pepsi is a call, which means we're looking for the up action here. Now, this is where you'll find some traders, and I know one for sure. His name is Kelly Korchak. He's a hedge fund manager out of Phoenix, and he only trades up. He only trades ups. So he buys, but he's also buys a stock buyer. He buys the stock to go long. I asked him questions about the idea of just doing the options, and he says, yeah, it works. It's just he's not an options person because he doesn't like time delay. There are many hedge fund managers out there who do not like to deal with time decay. So that's what it is. But this is good. We closed here. We're almost a little bit of flatness. Where this is Pepsi, 25% down here. Here is our zone up here to move up the defenders. We're sitting here and we're doing a 50%. So that's 2.5. It cost us 288. It's running 365. All right. Moving on. Last and final, Dominion. And Dominion is, oh, this is a heartbreaker. Whoa, what happened to my good position here, right? I got a put, and it's going in the opposite direction. Now, I did mention this earlier. If you have been following my prior videos, and I brought this up, I made a mistake. I entered a call above the 30-day moving average line. That's a no-no. I should have known better. What happened? Senility? All right, but the bottom line is that it's a mistake, and I will live with it. The best I can do is we're now at minus 32%. It's getting into the oversold zone here. It is a oil stock. We'll see what transpires, and if I do take a hit on it, it'll be about 150 added to the 382. It'll move it up higher up in the loss leaders list, and when it's time turn to get back into the trade, we'll look at it. All right, that says it for the Tigers. Let's go see what the Alphas are doing. Oh, really? Alpha? Come on, guys. You're supposed to be the leader of the group. All right, here we go. Nike. Now, Nike's kind of nice. Let's take a look at that. Where are you, Nike? There you are. Okay. Now, this is a funny one. It closed here, moved up here, and closed here. So we are moving in positive territory. Now, my defense is moved up into this zone. Nike hit a condition that I have, and so my defense is right in this area now. So I'll be watching it here, and we'll be going up forward. Nike done. Walgreen. Walgreen is a put, and was going down nicely. Hit a tweezer bottom. This is called a tweezer bottom. And when you have that, that usually is an indication of a reversal. My defense is here. I will be looking at some further studies after I finish this. You guys, I was on the afternoon with a one-on-one, good buddy. Him and I Zoom every day at 2 o'clock, and our sessions run a little bit long. We're doing some very deep studies. We got some exciting stuff on the platform. We've got exciting stuff on the drawing boards. So I don't get around to doing this the way I should be doing it, but that is what it is. And I'll be looking for something over here to defend. Where are we here? We're at 175 on the 50%, and Walgreen is at a minus 11. So we do have quite a buffer. When this gets to approximately around, right there, quads, minus 35, I will be looking for the exits in these zones. So with that said, let's go on and get going with PG. No, XLK. XLK. And it is a call. Hey, it is moving in the right direction. It had a nice crossover. We have one of my, if this was a fresh trade, this would be a entry setup. But this is an old trade, so we're writing it out, and we're at minus 14, 500 down, and I don't know how much XL. Oh, this is the one with the low-hanging fruit. There. Talk about timing. There it is. We're shooting for 268, along with recovering back our 504. And remember, this is the larger account. So larger account, that means it has less travel to overcome. Do the numbers. 268 plus 504 divided by 900, which is the number of contracts and shares I have. I'm looking for 85 cents move. 85 cents move divided by the 50 delta. I need $1.70 on the I need $1.70 from here to there. $1.70 or 80. Let's go ahead and add that in. 80.46. And there we are. So our target is somewhere right here. Look, 82.18. You see it right there? 82.17. So right in somewhere in here, we should be at break even. Well, no, we'll be at winners because we would have recovered our 504 and we would have got back our lost leader, which is this low hanging fruit at 268. And this is a very nice point here. So moving on. Okay, PG. Now PG is, I got this calculator in the way. I got to move it down here so we can see our stuff. PG is a call and a little bouncy, a little move there. Looks like some stochastics. How would I explain stochastics? Volume is your pressure gauge. The more volume, the more the pressure, the more opportunity is going to go in the direction of that pressure gauge. The way we could call stochastics could be fuel running on empty and MACD. So these guys, and then you see MACD is starting to trend. That's a good sign. We are in a call, which is what we want, is that up direction. We are 867 on here, and we're 639, and we have 6 contracts in play. So let's go on down to go to quad. Quad is, I have not, in the days of trading that I have had, and I started trading options back as early as 2013. Prior to that was mostly stocks, and I didn't know and understand dojis. This is what we're encountering. We're encountering a doji zone. This is incredible. So what's happening here is we're having what they call price pressure. And you can see the stochastic is already running out of fuel. So what happens in this zone, it's recharge time. Stocks can only go 3 directions. Up, middle, down. If it's down, the chances of opportunity is for the up. We're now having a trending MACD, but the price action has been very strange. It's been hovering in the zone here. We are at a 180 for the out. The quad is running at 237, so we still have a 60 cents buffer. We'll see what happens. Okay, coming into the close, coming into the last turn and coming down the field is XLV. Now XLV, I did call in the punting team. The putting team was called in because we are in a minus 50%, and we want to do is not to lose more than 50% of options. So I will be moving the stop into my last bar low here to protect whatever we can get out of this. We have 14, we're behind 1425 here, and we have 410 to catch here. 1800, 1835. So 1835 divided by 10 contracts, we're looking at $1.80. Looking for $1.80 and then divided by the delta, rule of thumb delta, 367. So we're looking at 367 plus 89.20. So our target is around 92.87. That's about up here somewhere. Right in there, that long defense right there. We get into this zone, we would have captured back all our money of the current play and get back our 410 and retire XLV to, well, let me see. I believe the XLV still owes us money on the larger account, but this is a low-hanging fruit trade because LIF went belly up, and I'm going to have the market pay me back. Since they no longer exist, it falls on XLV, which is the ETF for health and healthcare. Well, that's it for today for the winners and losers, and I thank you very much for tuning in on 10/10, October 10th, and trade smart, trade well, and trade for profit. Take care. Bye-bye.